Hello and welcome back to another video on StratCap. In today's video, we take a closer look at the current Israel-Iran conflict and at which companies in the defense industry might potentially benefit from it. But before we begin, a quick disclaimer. This video is for informational purposes only and does not constitute investment advice. Geopolitical conflicts do not only influence politics and security, they can also move capital markets, and particularly in the defense sector, investors often react very selectively. Instead of looking at the entire industry, markets tend to focus on companies that provide technologies that are especially relevant in modern conflicts. So to understand why that happens, let's first take a short look at how geopolitical conflicts influence defense markets. Historically, geopolitical conflicts tend to follow a recurring pattern in capital markets. Investors begin searching for companies that provide technologies or products that are directly relevant in those conflicts. In particular, three segments tend to receive the most attention. First, air and missile defense systems. Second, what are known as replenishment cycles. And third, ISR and C4ISR technologies. A good example of this dynamic can be seen in the development of the stock of Rheinmetall. After the start of the Russian invasion of Ukraine in February 2022, at that time, markets reacted very quickly to the prospect of increasing defense budgets in Europe. Investors began allocating capital to companies that could potentially benefit from higher military spending. And as you can see here in the Rheinmetall chart, the stock experienced significant gains within just a few days following the start of the conflict. Now, let's take a look at the individual companies. The first company we will discuss is RTX. RTX, formerly known as Raytheon Technologies, is one of the most important manufacturers of modern air and missile defense systems. The company is particularly well known for the Patriot missile defense system, which is used by many NATO countries and allied nations. These systems are designed to detect and intercept incoming missiles and other aerial threats. In addition to interceptor systems, RTX also develops radar and sensor technologies that are critical for modern integrated air defense networks. If we now look at the stock performance, we can also observe an interesting pattern. Since the beginning of the recent geopolitical tensions in the Middle East, the stock of RTX has shown a positive trend. This suggests that investors are increasingly focusing on companies that provide technologies related to air defense and missile interception. Especially in the context of potential regional conflicts, the protection of cities, infrastructure, and military bases becomes increasingly important. The second company we will examine is Lockheed Martin. Lockheed Martin is one of the largest defense contractors in the world and develops a wide range of advanced military technologies. Within the context of missile defense, two systems are particularly relevant. First, THAAD, the Terminal High Altitude Area Defense System, and second, PAC-3 interceptor missiles. Both systems are specifically designed to intercept ballistic missiles in conflicts where missile attacks play a central role. Such technologies can become strategically extremely important. If we look at the stock of Lockheed Martin, we can also see a positive development since the beginning of the recent tensions. While the price movements are somewhat more moderate compared to some smaller defense companies, the trend still indicates that investors are increasingly focusing on companies involved in missile defense technologies, particularly in regions with elevated missile threats, such as the Middle East. These systems play a crucial role. The third company we will discuss is Elbit Systems. Elbit Systems is an Israeli defense company that focuses on drone systems, surveillance technologies, electronic warfare, and network-centric warfare capabilities. In particular, Elbit is a major provider of ISR technologies, which stands for intelligence, surveillance, and reconnaissance. These systems allow military forces to gather and analyze battlefield information in real time. Looking at the stock performance, we can also see that Elbit Systems has experienced a noticeable upward movement since the beginning of the recent tensions. As an Israeli company, Elbit is naturally directly connected to geopolitical developments in the region. Investors appear to be focusing more strongly on companies providing technologies related to drones, surveillance, and digital battlefield systems. Despite these developments, it is important to emphasize that market reactions to geopolitical events are often difficult to predict. Conflicts can change rapidly, and in some cases, they can also de escalate. Short-term stock movements often reflect market sentiment rather than actual long-term changes in defense spending. In addition, long-term military investments depend heavily on political decisions and government budgets. Even if certain technologies experience short-term demand, that does not automatically translate into sustained long-term profits for companies. So in conclusion, geopolitical conflicts can push certain defense segments into the spotlight of financial markets. These include air and missile defense, munition replenishment cycles, and technologies related to intelligence, surveillance, and network-centric warfare. Companies such as RTX, Lockheed Martin, and Elbit Systems operate exactly in these areas. And that concludes today's video. If you enjoyed this analysis, feel free to leave a like. And if you're interested in more content about geopolitics, strategic industries, and capital markets, consider subscribing to the channel. Thank you for watching and see you in the next video.